So strong structures and clear one-sided moves, aka imbalances and fair value gaps. No matter what style or strategy you are trading, these two are still the most common mistakes. These two are causing a lot of losses that are completely unnecessary and easy to spot. Now, if we look at pure price action, how they look and how do we spot them, this is where using few time frames at the same time helps a little because you can see everything going on at the same time. On here, we have 15 minutes on the left and we have 10 minutes right here. So I can see that price is building higher, that pressure is building higher here on the 15-minute time frame. So obviously, I'm not going to look for 2 minutes reversals. 2 minute short-term reversal means zero, absolutely zero in this case. When we have clear one-sided bullish pressure on the 15-minute, the 2 minute reversal is just an inducement to continue pushing higher, especially when we have a clear target right here. So today, me and my team, we targeted this Asia range high as you go trading this 15-minute market maker buy model. And the second upside target was the 15-minute DPR, which got a hit to the pip, as you can see right here. There are a lot of traders. In this case, there are not as many obvious traps, but still a lot of traders took losses. I'm pretty sure that a lot of traders took losses, even from this DPR, because at this point, you can see that price spiked into it right here. We were still in a very clear bullish delivery right here on the 15-minute time frame. So you must understand that price will have its clear lower time frame direction, and you with your 2 minute, 5 minute, 1 minute, it doesn't matter. With your execution time frame reversals, it will be blowing against the wind, and most of the time you will easily get stopped out because of that. What we have right here is a strong structure. What we have right here is a strong structure. Why? Because it ran liquidity right here. It gave a breakout. It's moving into the main direction towards our main targets with the lower time frame direction. So in this case, we have the same thing right here. Now, when it's 2-in-1, strong structure and clear one-sided imbalance, one-sided move, it's the most obvious option to spot and not trade back into. So if we focus on this exact move, let's say, we have a strong low right here, and we have imbalance here, here, here. So we have a one-sided move. So both of these 2 points are ticked off right here. Now, price on a micro scale, imagine that it gives our smart money type of a reversal right here. Break structure, it runs some short-term liquidity right here. And from this point, we imagine that price will just start dropping all of a sudden, right? But most of the time, that won't take place. And most of the time, you will just easily get snapped out of your trade, seeing price move towards your stop loss just literally in seconds sometimes. Why? Because you are blowing against the wind. You are blowing against the main direction. And you are trading right back into strong structure, and you are trading right into imbalance. Even though price stopped like 1 pip above this imbalance, it's still the main thing. Why? Because we had this BPR right here. We had this clear as day balanced price range right here. That price retested, rammed this liquidity right here, and it just took off. So the main thing that I want to highlight basically is that if we are having a clear one-sided pressure on the lower time frames and we have a clear target on the 2 minute or 3 minute or 5 minute or 1 minute, it doesn't matter. You will, a lot of the time, you will see these one-sided moves. It basically stops for a second. It gives this strong low, rejecting, let's say, a fair value gap right here. And it continues running. And let's say we are still moving towards the same target. We get this SMC reversal. But what we have here, we have a strong low and we have imbalance, right? Especially if in this middle we have a lower time frame PDA, like let's say 15 minutes order block, right? It's an even more certain scenario that you will get stopped out even sooner, and you will see a price blow against your position even quicker. So in this point, a lot of traders right here are looking for sells, right? They are looking for a price to come back so they could short it. However, what price pretty much 80% of the time will do when the target is still not taken it will move with the lower time frame direction, and it will bounce off of these imbalance points, off of DPRs, fair value gaps, uh, order blocks, and stuff like that. All of the bullish PDAs it will bounce off of. So that's exactly where we are not looking for a pullback. We are looking for a long opportunity. We are looking to trade. We are looking to trade with the main market maker model. In this case, we were trading with this 15-minute my model. So in this case, we are looking for our buy side of the curve to complete its target. So we are completely avoiding all shorts. We're literally paying zero attention to all the smart money reversals right here. And the ones that happen in this case were not that obvious, because a lot of the time you see those insanely obvious ones like that. And if we have a clear, strong low imbalance, we are not looking for a reversal, as I mentioned before. Start looking for longs in this case to take this liquidity out and to take the higher time frame targets out. All right, so let's talk about it. I think you guys noticed in your trading career that markets move in cycles. There are periods when everything's lining up, everything's just going super smoothly, and there are cycles going nothing's lining up. Markets are moving choppy, it's going sideways. Basically nothing is making sense, and it's really hard to trade. It's just something you'll have to face, and your main priority is to make as much as you can in those smooth conditions and lose as less as you can in those choppy conditions. Firstly, you need to be aware of that and not get frustrated when you can't spot your target for the day or that session or that week, etc. When you can see those clear PDAs and stuff like that. It's really easy to get caught up and think that you're a bad trader, that something is lacking in your approach, that you need to change something or do something else or just jump back to backtesting and stuff like that. A lot of the time, it's not the case. Markets are just not aligned with your strategy at that particular moment, in that particular period. And that's completely fine. And the sooner you realize that that's completely normal and that's how trading works, the sooner you will start seeing those positive results. And how is that? That happens when you simply know when to touch the charts and when to absorb them. The uncertainty that we as traders face is killing traders, and it's something that is really just taking a toll on you every time you can't see what's going on in the markets. When you're not feeling your strategy well, when you can't see what's going on, and you can't see where the market is going to go that week, that month, and so on. At that point, you start thinking that you're the worst trader ever. Maybe you are. I don't know you guys personally, but most of the time it's not the case. Most of the time, markets are just shifting, and it's going into that sideways period where there won't be as much queen trades as before. From that point, we go from offensive to defensive mode. Yes, most of the time you will take one or two L's before you realize that. But how you act from there will basically determine whether you are going to push yourself into a deep drawdown or you are going to make it to another side of the river, basically, and jump on another winning streak. So, a very quick summary of what we just talked about here. You need to be aware of the fact that 70 to 80% of the time you won't even know what's going on in the markets. That's exactly why you must know what you're looking for. So if you can't clearly see it, nothing's even there, and your main job and your main priority is to not press any buttons, just observe what's going on the charts and not take any trades. The sooner you stop chasing the markets, the sooner it stops running from you. And that's where all the profits are made. But most of you guys put yourself in this spot of trying to chase it. And that comes from fear of missing out most of the time. What that means is that you open Instagram, you see a lot of traders posting their wins and stuff like that. And you get fear that you are missing out, that you are not good enough, that your plan is not good enough. And what you basically do, you jump on your trading plan and start changing things without any major reason. You start changing everything and you are completely lost once again. So I just can't stress enough how important it is to not allow these external things move you off center.